liquidations, compulsory or voluntary. I know if I was a director, I'd definitely want to go down the voluntary route because I'm a bit of a control freak. And I would want to, if I've nurtured a company from the beginning, I would like to see the death of that company if it is a liquidation. But it can get very, very passionate with the directors because they have to let go the staff that has been working with them for a long, long time. So it is all about control. But thank you, Luke. Thank you. I'm now going to discuss company voluntary arrangements, CVA, and the validation order. How many people in the audience, perhaps not solicitors, have heard of a validation order? Show of hands, many? We'll include the solicitors now. Not many. Oh, okay. And I'm going to put a twist on it with regards to putting it into a real life context, actually what happened at DCA, and Luke was the administrator on it, and it is still going strong. And not many people do like CVAs. They think they fail at the first hurdle. But I'm a betting person, I do like the horses, so we're going to see if we can actually get it to go over a few of the fences. And it is at the moment. So the company came in, the director had gone to see his accountant. The accountant had actually said, I think you've got a cash flow problem. I suggest you go and see Debbie of DCA. It did take the director a little while to actually make the appointment with me. I don't think I'm scary, but he obviously thought that I was. And he phoned me up and he said, well, I've got to go fishing, I've got to go on a holiday, can I have it in a few weeks' time? We actually then said, well, is anyone chasing? And he said, no, it's only the revenue, but they're just sending me nasty letters. So can I have a meeting in a couple of weeks' time, please? Sound familiar? What had happened, the director, they do normally leave it too late. Again, show of hands, let's wake you up a little bit, it's getting hot in here. How many people think their clients leave it too late? Yeah, quite a few out there. They leave it too late, ignorance, they think it's all going to go away, they bury their head in the sand. With a CVA, and before I come on to it, I just want to brief you a little bit in case you don't know about a CVA. In a CVA, the directors remain in control. Yeah, I won't tell you which one it is, but my thumbs do get a little bit sore. The directors remain in control, and control for most people is what it's all about. With a CVA, they don't have to buy the assets back. Sometimes they can't afford it. They want to carry on. You can only do a CVA when a business is viable. Can it actually work out for the next 5 years? It's normally based on voluntary contributions over a 5-year period. So we look at the cash flow. Can it make a profit? We usually have to take the directors' rose-tinted glasses off because they think that their company is wonderful. But why would they be coming to talk to me if they had a wonderful company and they could pay their taxes, VAT and creditors on time? There is a problem and we need to get to the bottom of what the problem is. Sometimes if a winding up petition is presented and they leave it too late, as Luke had said previously, if it's advertised in the London Gazette, the banks have their scouts and they scout down the London Gazette and then they should freeze the bank account. What happens to a company when the bank account is frozen? Can't pay anyone. If you can't pay anyone, your staff will maybe take a walk. Your landlord may be hopping up and down. If you need any supplies, you need cash, unless you've got deep pockets yourself. Okay. One of the questions I normally always say is, why has everybody left it far too late before they come to see me? Again, this chap, he thought his holiday was better, his leisure time. Was he thinking of all those staff that was working for him? Perhaps not. Validation order. They're wonderful things. That's where you actually get the bank account unfrozen. It's wonderful. If you've got a limited company and your bank account is frozen, you have to go to court to get a validation order. Who does it? The director and shareholders. You do need solicitors to be involved, and it is a very specified subject. Why would you? How it's a court order, and why to unfreeze the bank account. When you go to court, and I love this chicken and egg, when you go to court, the judge will want to see a copy of the CVA proposal. The judge isn't going to be very happy. Have we got any judges in the room today? That's good, they won't tell me off. The judge will normally tell you off if you go as an insolvency practitioner and ask for a validation order to do a CVA. They'll say, well, what are you proposing? How are you going to pay your creditors? Well, we'll work on that afterwards. We just want to unfreeze the bank account. You are kicked out of court quite sternly, and it's quite humiliating. So you do have to chicken and egg. You have to get all your CVA proposal done, ready to present to the court to actually then get the validation order. So what's in a validation order? The accountants in the room may be starting to think now, oh, she's talking my language. They'll need to have extracts from accounts. The bank account details. The judge will want to know, what bank account do you want unfrozen? As I said, a copy of the CVA proposal, and what payments. You can't just unblock the bank account to pay anybody and everybody. You have to be specific and say, it's a distress payment. I have to pay my staff, otherwise they're going to walk. I have to pay my key suppliers. I've got to pay my landlord. Normally, that doesn't mean that you've got to pay HMRC. They don't like it, but they would be given a preference. And I'm not mentioning anything about that today. So, the case study. As I said, the client was in financial distress. His main creditor was HMRC, aren't they always? They don't pay their VAT, PAYE, corporation tax. They haven't put the monies aside to be paid at a later stage. He did say there's no legal action. After seeing him, I did say a CVA was the best thing for the company. The reason why I didn't say administration is that he did have quite a lot of assets, and they wouldn't have been able to have afforded to buy those assets back, even at a distressed value. So the director had a viable business. He remains in control. That, as I said, remains in control is one of the biggest things that people want. They don't want to lose control. That's why they've got their own businesses. The assets aren't sold. With the CVA, it gives you 5 years to repay your creditors. And it's a partial payment. It doesn't have to be payment in full. It doesn't have to be 100p in the pound. It can be 20, 25, 30p. So, what did we do? Well, we actually spoke to Inland Revenue and said to them, you've issued a winding up petition. We've got a winding up hearing in the High Court in a few weeks' time. I cannot move that quick to get the validation order. So can we first of all ask for an extension? They asked me why. As I explained, a CVA to put it together does take a lot of time. So we first of all asked for, and we will speak to HMRC to let them know what our intentions are. We told them we were going to also apply to court for a validation order. As I said, we requested the adjournment, but we did have to attend the court hearing with the director to let the judge know exactly what our plans were. And it is a 3-stage process. The winding up hearing you have to cancel, you then have to go for the validation order, and then at the end of it with the CVA proposal. I think Luke actually went to the High Court because I was actually in Antigua on holiday. He didn't thank me, but I wasn't going to fly home. So, result. Not like England last night, but we won't go there. We did get the adjournment. We got the adjournment, I'm pleased to say, so we could then start. And we could then start looking at the CVA proposal. Because if we didn't get the winding up hearing, we then couldn't move on to the next hurdle. I'm back at the races now. We couldn't then, if we didn't get the adjournment of the winding up hearing, we then couldn't do the CVA proposal, we then couldn't do the validation order. So again, chicken and egg, you have to do it in different orders. What actually happened? Cash flow. Accountants in the room are going to love me now. There we go. And I'm just checking myself for time. At the back of your pack of your handout, some of you may want to have a look. In there we've got a cash flow. It is the actual cash flow. There's no names on it, so you won't know what company it is, but it's a cash flow. Please, accountants in the room, don't get me check all my figure work, but this is the one that actually went. A cash flow for the non-accountants in the room, it's actually predicting what you think your sales are going to be, what your expected payments are going to be, and if you have got a viable business, the top should be greater than the bottom, so you have got a surplus at the end of every month that you can say, I can afford to pay that to my creditors every month. And you'll see right down the bottom of the page, CVA contribution, £3,500 a month. That's quite a good surplus actually. So I knew after doing this that we have got a viable business. I do like reciprocation work. If an accountant refers a client to me, we don't normally do these. We'll say to the accountant, can you actually do it for you? And we can actually pay you for doing it. We don't ask you to do it for the love of it or for free, but we do have to disclose it. So that was the CVA, £3,500 a month, so £210,000 over the 5-year period. You then move on to the next piece of paper, is the estimated outcome statement, the one where it's got two figures. Whenever you do a voluntary arrangement, it could be a 40-page document. Creditors will look at this one page. What am I going to get? If you look at it, in liquidation, they would get nothing. But in a CVA, if they waited 5 years, and I'm not being sarcastic, but if they waited 5 years, they would get just over 45p in the pound. Some of you may think, well, that's not very nice, but if they didn't accept the CVA, that company would go out of business. It would most probably go into either voluntary or compulsory liquidation, and they would lose the future profits of that company. So in my eyes, as an insolvency practitioner, I think that's a very viable business, a CVA. I was quite pleased that that would be put in front of a judge, and I could stand by that and say, you've got a viable business, it's got some cash flow problems, but it's doable, because the cash flow. We're then moving on as well, and you can see at the back a summary of the assets and liabilities of the company. Summary of the assets and liabilities of the company. That tells you what the assets are, what the liabilities. Again, it does show that the company is insolvent. They had just over £500,000 worth of assets and liabilities of £750,000. Yep. It isn't just these 3 papers that go to the judge, by the way. It is about 40 pages, but this is the main financials that actually go with it. So, moving on, we actually then went to court, and tick-tock, it seems ages when you actually are waiting for something to happen. And we sent out the proposal to everybody. We did get the validation order, which was lucky, so the bank account was unfrozen, so the director didn't have to keep on putting his own personal monies in to pay the staff. We had the directors' meeting, and as you know, you have to get over 75% in value of those present and voting to agree to a CVA. The key thing in this particular case was HMRC, because they had a blocking vote. The blocking vote meant that they had over 25% of the votes. So we had to speak to them. They did like my CVA. As I said, I was proud of this, quite passionate when it's one that, and I stand by it. So they voted, yippee, 90%, what a result. That was good. That made me happy, because you do all that work. If we hadn't have got the adjournment right at the beginning, if we hadn't have got the validation order, if we hadn't have got the creditors to accept, would be right at the beginning again. So we got 90%. The CVA is still ongoing, I'm glad to say. CVAs, they're very underutilised. I'm passionate about it because, as I said, the directors keep control. If I act as an administrator, I have to go in and run the business. Every single piece of paper has to say in administration. The directors lose control. In a CVA, all we do is actually monitor those monthly payments. They're brilliant. CVAs are well liked by HMRC, and HMRC will support them if you've got a viable business. And that all comes back down to, as I said, with these pieces of paper. So my message really is sometimes your clients can leave it too late because the winding up petition falls on the door. Registered office, so your accountants, if you've got a registered office and a winding up petition, it is quite nice if the directors come and see me earlier rather than later, but if they don't, you can actually go to court and get a validation order to unfreeze the bank account. So hopefully that's given you a little bit of an insight into a CVA, why and how it should be worked, and how you get round unfreezing the bank account when you've actually got a validation order. Okay, that's me for the moment. You will see me back again in a little while.